So here is what a lot of people do not understand about life insurance. There are two types of life insurance. There is term life insurance and there is permanent life insurance. Term life insurance, I can get a lot of insurance for a little amount of money, but it only lasts for a certain amount of time. And what I hear over and over and over again is, oh, I've got life insurance on my job. What you have on your job is term or group life insurance. It has a 98% rate of actually paying out. If you leave your job or your job leaves you, you do not have that life insurance policy. Okay. I consider insurance at work icing on the cake, but it is not game changer. It is not a game changer strategy, in my opinion. We do sell term life insurance, and I think that term life insurance does have a purpose. Buying it directly, like outside of your job, you own the policy. Okay, if you think about it, your job kind of owns what they're offering you. If you get it outside of your job, you own the policy. So now let's talk about permanent insurance. Permanent insurance does cost more, but what we like about it is it never expires. Okay, there's no end date to it until the claim is made. And because of that, you are paying premiums into that policy. And that money inside of that policy is actually growing. So how insurance works is people pay their premiums, the insurance companies take that money, they invest that money, which is how they're able to have money to pay all of these claims. In situations, they take the investment and they will give a portion of the gains to the customers. You may hear dividends or this, that, and the other. So our permanent life insurance policies, permanent here today, here till the claim is made, carry cash value inside of them. Okay, I know you've heard on the internet, it's like a bank. Okay, so you can think of it like a bank. You're putting money into this life insurance policy. And if you need access to the money, you can borrow it if you would like. You can borrow it and pay it back if you want to. You can borrow it and not pay it back if you didn't want to. If you don't pay it back, then it decreases your death benefit. So if you have $100,000, you borrow 20, you pass away, $80,000 would go to your beneficiary. The beauty, and I used to sell real estate. So a lot of people could not buy houses because they did not have access to money. They did not have down payment money. Money inside of your life insurance policy, you do not have to qualify for. We don't have to do a credit check. We don't have to know, did you pay your taxes? I don't even have to know what you need it for. It's your money. You can come and get it. And a lot of people don't even realize how easy it takes to come and get that money. In my office, anything under $10,000, I can cut a check in 5 minutes. So it's actually better than the bank. The money that you're putting inside of the policy is actually going to grow greater than a bank. So you're going to have a bigger return on your money. Worst case scenario, you pass away. Now your family gets the death benefit. And so what a lot of people don't realize about insurance, it's an aleatory contract, okay? So aleatory, you put in a small portion of money, but the insurance company is willing to pay out a larger portion of money. I tease people that a life insurance claim is the one claim that you are going to make, okay? It is going to happen. And when you put your premiums in, you're never going to put, if I have a $300,000 policy, you're never going to put $300,000 into this policy. is permanent insurance part of Infinite Bank, or is that something totally different? Yes. So people call it different things. I'll tell you, all this stuff on the internet, people come up with all this creativity, right? We come up with the creativity to make it sound like it's something new. Okay. Infinite Bank cash value, same thing. But somebody came up with the word and it sounds very catchy and it sounds new. So that's what they call it. Okay. Permanent life insurance, it's got money in it, period. No need to complicate it. But you're never going to put, if you have a $300,000 policy, you're never going to put $300,000 in the policy. Never. In our case, even if you did put $300,000 in it, the death benefit is probably $400,000. Does that make sense? So you're never going to put more money into this policy. A lot of my customers and people say, I'm going to save. I'm just going to save the money, or like Ariel said, I'm going to work hard and then I'll have the money. You're not. The reality is you could put money into a life insurance policy. You could put $10, $20, whatever. And like I said, if you pass away, now your family has $100,000. That sounds like a great deal, right? Sounds almost too good to be true, but it is true. It is very true. It happens. It happens all day. Now, in Candy's case, if her strategy was to put money into her daughter's policy, that means her daughter, Candy, is insuring her daughter's life, okay? I do it on my daughter's life because my daughter is younger. My daughter is healthier. The premium for my daughter is going to be less expensive than it is going to be for me. However, I have policies on my boys. They're 18 and 19. However, I am the owner of the policy. So Candy is the owner of the policy. She controls the money. She controls being able to withdraw money out of the policy. She controls the beneficiaries of the policy. So I would assume that her strategy, the reason why she did it for her daughter, was that the premium was cheaper for her. And not only that, is if something happened to her daughter, she would have that death benefit. And then she is now setting her grandchildren up, right? Because if Candy passes away, that policy is there. It's in force. It's not going anywhere as long as the premiums are paid. And then when her daughter has children and her daughter passes away, because the policy is on her daughter's life, then the money will go to her grandchildren. Does that make sense?
Yes.
Now, at State Farm, we have what's very popular for our children are our limited pay policies. And so you pay them for a limited amount of time, 10 years, 15 years, or 20 years. And once you've put money into that policy for that amount of time, no more premiums are collected. The policy is never going to expire because it's paid up. The policy is going to continue to grow. And I can show, if you guys want to reach out and do some individual appointments, I can definitely show you how that works. But the policy will continue to grow and you are not putting any money into the policy. So it is, go ahead.
Is that limited policy also a whole policy?
Okay. So you use the word whole. So let's go back to insurance. There are two types: term insurance and permanent insurance. Whole life insurance is a type of permanent insurance. Okay. Limited pay life insurance is a type of permanent insurance. Did that answer the question? So a limited pay is not a whole life policy. If you think about it, limited pay, you pay it for a limited amount of time. Right. Whole life, you pay your whole life.